want to be there when it's not going the way you're hoping. So it's a situation where when the market does decide to change, you're out and you're not wasting your. We look at some of the other markets. Get rid of that one. I'm going to switch over here now to the, well, let's look first at the US dollar index. Let's see, I'm going to go back here to switch. We're going to make this a universal switch. We're going to apply that particular look to that screen with all the indicators to all of the other markets that we have up here. And now we can go to the US dollar and we should have that appearance there. Okay, we have a situation right here. If you have been following what has been going on with the dollar, you'll see a situation here. Let's do a switch. Let's take a picture of this one and come back and show you a little bit about trading the dollar with the indicators that we have here, the signals that we have gotten here. Okay. First of all, when we were talking about what is happening with the dollar, remember we were talking about the market has jumped out of the box and is going to get over. We're going to look at this particular area right here where you have a situation where the market did move above the predicted high. The clue that this is a place where you might want to get on board. If you look down here, you have the predicted neural index is at 1, which suggests a bullish uptrend. You have a situation right here with the predicted differences where you have the crossover to the upside. That suggests that there's some momentum that is building for a rally. And so you would probably be looking at a situation here where you would want to be long when the price breaks above the predicted high. Your guidelines may be a little different. You may say, okay, I will do that, but I'm not sure exactly what point. After a while, when you get a little experience in doing this, you will be able to determine more where that point is in terms of how it meets your goals and your risk guidelines. But we'll give it a little leeway here, and we're going to get in the market a few points above 75 because it's going up. There are several ways to trade it then, but I like to look at it. First of all, I might want to set some profit targets along the way. I prefer to trade 3 contracts, and that way if I have a situation where the market goes up, I can take profits on a couple, hold on to the one. There are a lot of ways to do this, and you don't know for sure what the market is going to do, but in this case you had a situation where the market went pretty well straight up. You keep your trailing stop below the predicted next day low, that pink line, and as you have your market moving up and you keep putting your stop below the points, at some point you will get up here where you have a situation where the market starts to turn down, and if you'll look down here towards the bottom, you'll see that you have the differences have started to move down. They're angling down. You'll have your Euro index has dropped to 0. All of those are very I'm going to put a stop here. If you had a point here, let's say a little above 75, you're going to have a stop below the predicted low up here. Once you have that one, you're not going to keep moving it down with the predicted low, but you're going to maintain your stop right in this point, right in there, because you don't want to be in a situation where you start juggling your stops and take the chance that you'll evaporate lose some of those profits. So you're going to be out here above, like say 77.50 or a little bit above that. It's a 2-point move, 200-point move. It's not bad, not a bad trade, or it's actually, when you count up the total number of points, something like 500 pips, $5 a pip, $2,500. So not a bad trade, at this juncture. And now you're sitting there with the market going sideways. Now there will be some times in this whole market situation where you will have a lot of sideways action, and you'll have a situation where the neural index is jumping from 1 to 0 to 1 to 0. nothing very conclusive about that. So in those cases where you don't know for sure what the market is telling you, that's a good time to just kind of sit out on the sidelines and not attempt to do anything, because if you are trying to do something, it's possible that it could be worse. You don't have to force yourself to trade, because you don't necessarily have to trade all the time. And screen, I want to show you a couple of more markets and show you a little bit more about some of the things I look at. I don't have all the same drawing tools on there that I do, with the other program, but I'll bring the screen back up. Okay, now we're back to the U.S. dollar index chart. When I look at the situation in crude oil, switching to crude oil, as you're well aware, the market has rallied, especially it rallied yesterday on Monday. Market has moved up rather sharply. And now here's a situation where you would probably like to keep a stop, again, because you have a pretty good clue that the market is going up, and the next thing that usually happens when the market goes up is that it goes down. So if you aren't on board, if you did not get in on board in this particular case where the market was right there, where it moved up above the predicted high, and you're waiting now for the turn, you probably would like to keep a stop below the predicted next day low to get on board the move down. As you can see down here, you have at the lower part of the screen, you have a crossover indication. You don't have a strong indication that that's going to happen yet, so it's not something you're going to jump in and do immediately, but it is the type of thing that you may want to be aware of, that this could be the next potential move that you're going to be looking at. Looking a little bit at gold. In case of gold, we had a situation where the market did trend down, as you know, as especially the gold bugs know, to their disappointment. But if you can look at the bottom part of the screen, the predicted differences have made a crossover. The predicted differences are moving up. The neural index is at 1. Pretty good clues all along the way there that when you got to this point that maybe you would like to keep a stop above the predicted next day high, so that when the market did exceed that area, you would be long. And as you can see, that would have occurred on the market yesterday, where you could have gotten long gold and ridden at least part of that move. That's not a guarantee that that's going to be a winner that's going to keep going up and up, but it's a good short-term to consider. It's, as I say, one of those you need to be prepared and ready to jump in when the situation merits. Let's move ahead. Let's go to, let's look at wheat.